Following the results of the election, the stock market has been soaring, reaching new all-time high. And while the future looks quite uncertain with a switch of presidency that could see some new tariffs on all exportations made in the US, the coming of Donald Trump as the new US president might represent a certain opportunity for certain Canadian companies. It is why today we'll find two of the best stocks that have the most potential of growth for the next couple of years following the results of the elections. One of the big measures that was proposed by Donald Trump was to
"We will drill, baby, drill."
Indeed, to lower the price of energy that has been plummeting over the last couple of years in the US. Trump has the objective to restart drilling more oil on US soil for his next mandate. It is why it is pretty much certain that he will reinstate certain projects such as the oil drilling in Alaska's Arctic National Wildlife Refuge to help lower the price of oil. And so this type of measure could greatly benefit a company like Enbridge with the ticker ENB. Enbridge is currently one of the largest oil and energy companies in the entire world with a market cap that exceeds $100 billion, by operating North America's largest gas utility by volume that transports close to 30% of the crude oil produced in North America and that moves about 20% of the natural gas that is consumed in the US. It is a company that will definitely benefit from a potential increase in the production of oil and natural gas. In fact, following the results of the election, we've seen that this has been seen with a pretty good eye by many investors, where the value of the stock has been quite importantly increasing the days following it. What is also pretty interesting about Enbridge is not only his big involvement in the Canadian market, but also in the American one. Over the past couple of decades, we've seen that Enbridge has been making quite a lot of acquisitions with the objective to increase their total production and at the same time their total revenue. Over the last year only, we've seen that Enbridge has acquired three important companies from Dominion Energy in the United States, which has helped them to become North America's largest gas utility by volume. More recently, Enbridge has also started to talk with its different customers about a potential expansion in its mainline pipeline network to handle growing volumes of Canadian oil output. This great progression has been mainly driven by a certain increase in most of their branches, except for the renewable power branch that has been slightly diminishing. Furthermore, despite high maintenance capital and higher financing costs, we've seen that Enbridge has also been able to produce a slight increase in their distributed cash flow compared to the same period last year. Add to this, on the Canadian market, Enbridge is also considered as a dividend aristocrat that has a 29-year streak of increasing its dividend that is now sitting close to 6.50%. Also, even if Mr. Trump isn't the biggest fan of renewable energy sources, we can also see that Enbridge has been working on this particular branch over the last couple of quarters. Indeed, with their net zero gas emission from operations before 2050, Enbridge has started to invest in important renewable energy projects. For example, great wind farms and solar panels that can now meet the energy requirements of more than 1 million houses in the country. Plus, knowing that Enbridge currently has over $90 billion of debt, the more recent rate cuts from the Fed and the BOC will definitely have a positive impact on the profitability of the company. So it is definitely a business that I will personally continue to buy in my portfolio, especially with the coming of Donald J. Trump as the new president of the United States. Then, second on my list is another sector that has been talked a lot about by Mr. Trump during his campaign, which are the banks. Indeed, with its intentions to lower the taxes for corporations, with the fact that President Trump has said that he wanted to enforce fewer regulations for banks, the outlook for the banking sector is way more encouraging under Trump, as said Dan Cosworth, an investment analyst at AJ Bell. He also said that banks would have fewer constraints and be able to use more cash for lending or share buybacks. And so, following the day of the results results, we've seen that this has had a direct impact on the value of the US banks, as we can see with the KBW Regional Banking Index that has gained over 13% of value on Wednesday. So overall, this represents some great potential news for all the banks that have some operations in the United States. One of the most exposed Canadian banks to this market is notably the Bank of Montreal with the ticker BMO. This Canadian bank that is currently worth slightly less than $100 billion is a member of the big 5 Canadian banks including RBC, TD, CIBC, and BNS. But since the beginning of the year, we've seen that this company hasn't been able to perform quite well compared to the overall market. This underperformance of this financial institution came just after some bad earnings results where the company has been underperforming the analyst predictions. These bad results occurred mainly because the bank had to set aside quite a significantly amount of money for potential impaired loans, mainly within its US segment where we've seen that their provision for credit losses increased by over 84% year over year. However, it is important to understand that this type of event is quite normal with the numerous hikes of the interest rates that we've seen over the past 3 years. It is why BMO hasn't been the only Canadian banks that has been impacted by this type of event. However, just like for Enbridge, the more recent rate cuts that happened in Canada and in the US will definitely benefit all of these great financial institutions. This will notably help them to potentially lower their total provision for credit losses for the next couple of quarters. In any case, when we know that our US segment accounted for about 36% of their total adjusted earnings in the last quarter, the coming of Donald J. Trump as the new president will definitely greatly benefit this branch. This is especially true when we know that BMO has been growing their US market quite a lot over the last couple of years by making important acquisitions. For example, in 2023, they've acquired the Bank of the West, bringing in an additional 1.8 million customers to their business and extending its presence through more than 500 additional branches and commercial and wealth offices in key US growth markets. Plus, at the moment, the company is trading to a pretty interesting price to earnings ratio of about 15 with a great quarterly dividend of about 4.50% at the moment, which will definitely grab the attention of certain dividend income investors. So there you have it. Those are 2 of the best Canadian stocks that could definitely benefit from the coming of Donald J. Trump in the Oval Office in January. Obviously, the big beneficiaries of the measures adopted by Mr. Trump, notably the tariff on all the exportations, will be the different US businesses. And so if you're looking to find what are these American companies that have the most potential of growth for the future with the coming of Trump as the new president, well, check out the video that's gonna be right over here, and I will see you soon. Peace!